Hey guys, thank you so much for being here. It's time for the afternoon high yield update. There's Jackson. Hey Jackson, what are you doing there, buddy? Hey Jackson, come see me. Come here, come here. Oh yes, sir. Look at that pretty dog. Look how good he is. Look how good that dog is. Jackson, you're a good boy. You're a good boy. Now you have food. Let me do my show, okay? Can I do my show? Thank you, Jackson. All right, let's get this screen shared and see what is going on. Or actually, let's do it like this. Let's see if I can do it without messing it up this time, like this morning. All right. Now let's get this thing shared. Hey, DGen, how are you doing there, bud? All right, let's look at the market. God, I was looking at K-Silv today. Man, incredible. That's it. Absolutely incredible. Just real quick, I'll show you what I was doing really quick. Here's K-Silv on top. Here's Silv on bottom, SLV, the underlying. You know, it's virtually the same. Look at this. K-Silv went from 20 to 55. All right. So actually 23 to 55. It's 22 points or something. 27 points. It's up 27 points. So it's more than doubled. It's more than doubled. I was thinking, I doubt this SLV's even up that much, but it is. SLV's gone from 42 to 101. So SLV has doubled and then added another 10%. But I mean, pretty much K-Silv is getting about 90% of the upside of silver. I mean, that just didn't happen in covered call funds before this latest batch of funds came out, and people like Howard and Matthew Tuttle, and there's managers out there, David Nicholas, that are real concerned with catching upside, and I always appreciate those kinds of managers. All right, let's look at SPY. That one happened to be up, and I was checking it out a little while ago. I thought you guys might be interested. So let's get this SPY going here. Looks like SPY was up about half a point. Can't wait to get that trackpad. I'm just a trackpad guy. I'm not a mouse guy. I'm a laptop guy. All right. There's probably not a lot to see in the market today. Reset chart view. I keep messing it up. All right, there it is. I just want to look at the little shorter term chart. It looks like it rallied this morning, made a little high at 10:30, then tried to make a little rally again this afternoon, didn't even get as high. Basically went straight. Well, didn't go straight sideways though. Went up and then sideways. Let's just say that. Hey SB, how you doing, bud? SB is in the house. Okay. Q's kind of the same deal. They rallied in the morning and then just died. Went straight sideways. Let's see how Bitcoin's doing. And we'll check out gold. We've already looked at silver. That's all right. So Bitcoin has got ahead of itself on the downside. Thank goodness it was ahead of itself, and then reverted to the previous POC, which is what it did today. It actually reverted to two previous POCs. Anyway, whatever. Maybe it'll revert back to this one tomorrow. This POC is the controlling POC on the whole chart. It's the point of control for the whole chart. Is the one at 91,000. That'd be the next trading range the bulls want to try to get it stuck in. And then from there, hopefully they can mount a rally for 95,000. There's going to be a lot of sell orders in here right around where this trend line is. As you guys know, we'll have to watch for a trend line failure. But in any event, all right, we'll keep an eye on that. Let's look at gold. I mean, gold's, this is insane. This is absolutely insane. Holy cow. I mean, this is, you know, it's the same thing with K Gold and gold. I mean, I'm sure gold's up a little bit more, but K Gold's substantially catching all the darn upside. Covered call funds didn't used to do that in the past. I take that back, unless they use leverage. I mean, you know, leverage, but leverage works both ways, which we've seen recently on some of these. So I like the way Howard's doing it. He's trying to, anyway, we'll see. We'll see if he can keep it up. All right. Dividend Degenerate. Yeah. SB. So Max. Put a zebra. Okay. I put zebra and a call zebra at the same expiration. See, I love that strategy. SB always comes up with strategies I love. We're SB and I like the same types of strategies, maybe. Yeah. SB is an arbitrager also. You're long and short at the same time, and I almost always am too. Sometimes I'll take an outright position, you know, but especially when I'm selling options, I like to essentially try to be neutral. And SB, you know, is neutral with a bullish tint. If I understand your, you know, from what I understand about your trading from watching it from afar. So Max, I put zebra and I call zebra at the same expiration. So I put zebra. Okay, so you're long volatility because the zebras are long in either direction. You have, you know, zero intrinsic back ratio. So you have black swan protection on either side, you know. And geez, man, crimey, are you serious, DGen? You're 2,700%. My lord. Anyway, yeah. So that's, I'm always in. I love those kinds of strategies. That's like a straddle strangle swap. You're long and then you're short at the same time. In fact, that is a straddle strangle swap. It's another version of a straddle strangle swap. The put zebra and the call zebra are your strangles, and then you're selling straddles against it. Yeah, I love it. I absolutely love it, SB. Yeah, SB needs to teach that to us. It's called a straddle strangle swap. I'll show it to you. Or wait, hang on. We'll look at it in an option strat, but in case there's let's just do the general stuff first. Let's check out the degenerates and let's check out stock tools. And here in about 10 minutes, I'd love to, we'll put it in option strat and I'll give my opinion on it. I'll give my opinion on it. On SoFi, it's like selling a 24 put, 28 call. Okay, we'll try it on SoFi. Okay, well, we'll look at that. Let's just finish this up real quick. What's happening with the divas? Now, that's a good look on this diva. Look at this block on a half-hour bar. It left a little gap behind on a half-hour bar. These aren't super liquid, but I mean, that's good to see. Close on the highs of the day, up 2.5%. Like to see that. Let's look at ULTY, my former favorite. Now it's dropped down to about, I don't know, 5th place or something. In any event. Okay, now ULDY, it got right back to this massive gap down that it had, and that came from that sell-off on November 12th. I remember that sell-off. That mid-November sell-off was nasty. I think it was the day I bought Salty, to tell you the truth, because I was like, anyway, I just got 5% in Salty, but I was afraid it could get a lot worse. I'm glad it didn't. I'm glad the market bounced, but anyway. All right, so that's ULTY. Let's look at ULTI, and then we'll go to ULTI was actually up 4.5% today. Heck yes, ULTI. ULTI was up more than blocks. That's amazing. And then let's look at old K-Yield. K-Yield was actually up 0.75 of a point and is up in after hours. Let's look at the diversified divas. Let's look at the rolling total return. Qs and SPY are both above or making money in the past 3 months. None of these other ones are. Chippy, Qs, and SPYs. Every one of these other ETFs, even blocks, even K-Yield, has been a money-losing investment thus far. So anyway, Let's look at the daily change and see how. Oh yeah, it's a pretty good looking day. I mean, heck, when you have ULTI up 4.3%, that's pretty good. ULTI has only been up more than that. 1, 2, 3, 4, 5 times it looks like in the past, been up that much or more. But anyway, great job ULTY. Great job ULTY. K Gold is beating gold since inception. Wow, that's crazy, isn't it? That is absolutely insane. It's not supposed to happen. Oh well, and I did say that there are funds that do covered call funds that use leverage can outperform the parent on the way up. But and then I said, but not this one. But actually, this one does use a little bit of leverage. I take that back. This one is basically about like a W fund. It doesn't lose, but anyway, yep, you called it. It's beating a dividends reinvested and dividends not reinvested is just barely behind. But I mean, yeah, it's the same. It's basically the same. It's the same asset except K Gold put $1.70 in your pocket. You know, of spendable cash. So, but I mean, the other side is if you'd bought gold, if you had gold, you're doing all right also. And if you need spendable cash, you could sell a few shares of GLD. I like the option method better, but teach his own. All right. Okay, Kago. So we looked into that. So let's look into stocktools.app and see what else is up. I think I already got this loaded. So we'll look at this real quick. Then let's get into option strat. Yeah, but I'm obsessed with straddle strangle swaps. I thought I invented the straddle strangle swap. I mean, I did invent it. I did invent it, and it was the trade. I'm always talking about how I made $2,700 on an earnings trade on a one lot trade on, and I was trying to think. It was a one lot trade in Lululemon. It was a straddle strangle swap. I'd sold a strangle to pay for 2 straddles, but I use a ratio straddle strangle swap. That's what I had actually discovered. I thought I had discovered, but no, it's other people have discovered it too. Okay, let's look at the universe of ETFs. Morrow is number 1. Oh, wow, BTGD is number 2. Look at that thing just spiking IBIT. Now, this thing does use leverage. So this is an example of an income fund that is able to outperform on the way up. Most in the W series is an example of an income fund that's able to outperform on the way up. QLDY, blocks are also examples that are able, MEMY, MEMY, that are also examples that are able to outperform on the way up. K Gold and K Silv. But there's just a handful of funds that have that ability. All right. Anyway, look at BITX. Heck yes. This thing's like 8% of my, or it was 6%. It's growing. It got down to like 5% of my account, but now it's growing every day because it's blowing up. Anyway, good job, BITX. Hey, remember Matthew Tuttle's going to be on the show on Friday. I have the here's the thumbnail. If you guys want to get a sneak preview of the thumbnail. All right. Look at old LFGY getting in on the action. Heck yes, LFGY. Heck yes. MSFW getting in on the action, outperforming the parent. AMZP. Now that we have a new generation of covered call option or covered call strategies, when I first started doing this 2 years ago, none of the funds outperformed the parent. Never, ever. It's not over, maybe in a 1 day time frame, but never over any period of time, any length of time. But then a year ago or 6 months ago, or blocks came out and a few others came out, and the W funds came out, and they were able to outperform the parent in a bull market. And then, you know, we got Mimi, and then we got the lightning spread funds and QLDY. And so the thing that's so cool about the lightning spread is it does not use leverage. You know, because the way that W is good. It can beat the parent on the way up, but it uses leverage. You know, the lightning spread does not really use leverage. Now, I think it's kind of technically, I always call it hidden leverage or stealth leverage, but it's not. They don't borrow money to do the lightning spread. It's not borrowed money leverage. Let's just say it. All right. Well, anyway, let's look at. Let's see what you guys are talking about. Let's see what SB is talking about. All right. SB says I'm just in theory stage. Oh yeah, I've spent a lot of time on. Then a straddle strangle swap is, or the ratio straddle strangle swap is all I thought about for like a year in 2021, 2022. I thought I was going to retire. I thought it was going to help me freaking, you know, retire twice as rich. But it's like any other trade. But, you know, but even though I didn't believe in free money then, I wasn't as big of a believer as I am now. But it's like anything else. It does, when it works great. But it's like anything else. I mean, the market makers aren't going to let you have a trade that's going to beat them consistently. So, but anyway, it's a delta neutral with a little breathing. Yeah, I love it. With almost no extrinsic. I love it. I love it. Yeah, we're all intrigued. So let me show you my interpretation of what SB said. Now, hang on a second. You remember the old GDE fund you covered way back when? I don't really remember GDE. GDE. What did it do? GDE. I don't remember it. Let's pull up FinViz and we can look at it while you're commenting. I need to come over to that Roddy. I need to start showing up with those Roddy videos. I need to set an alarm. I want to start participating with you guys, SB, on the Roddy stuff. I think that's right up my alley. Okay, GD. Oh, I forgot about this. So how did they do this, though? So it's gold plus equity. So basically, this is return stacking before return stacking was out, right? Because I'm starting to remember this is, I think it's just half gold and half equity. I don't think it's levered. See, they own gold futures. It's 2.4% of the account. Well, I don't know. Yeah, interesting. Yeah, gold and S&P. Okay. Sweet. I'm glad TDAX declared. I'm glad you guys are liking that one. I put a nice chunk of which one? Oh, GDE in your mother-in-law's account, and it's up 50%. Heck yes. Did I find it for you? I feel good that no, that's what I love to do is find it, you know. I don't think I found that one, but I love when I'm onto something and I figure out it's good before other people. Like I was the first influencer to figure out the blocks is badass. But anyway, whatever. But yeah, that GD is interesting. Yeah, maybe they do a little bit of leverage. Wisdom Tree. Let's look here at their records. Yeah, here it is. Return 1 year, 86%. You know, performance, you're up 50%. You probably put her in about 6 months ago because it's 52% in half a year. You know, holy cow. Great job. Son-in-law of the year, Mr. SB. So, Andre, are you liking that TDAX second dividend, 10%? How are the dividends going on Mago? Has Mago paid, MAGO paid dividends yet? I think I've been waiting on that one. Let's look at MAGO. Now, MEMY has been paying dividends. I'm going to open option strat, though. Okay. So, well, not Mago. I didn't mean to do that. Oh, I don't want to do that. I don't want to do that. I almost canceled this. Hang on. Okay. All right. I was just checking something. All right. Oh yeah, they paid 3 dividends yet. One of my 8, 8, and 8. Okay, what's that? Yeah, we already did this before because 8 times 52 is what, 56 or something like that. It's going to pay about 20%. I mean, if it paid $5.60 and it cost 25 initially, is 10 cents times 52 would be $5.20. So 8 cents times 52 would be like $4.50 or something. So anyway, it's about 20, but it comes out to 15-20%, right? Is that what you guys are getting? Yeah, I want to see that back test. You said you were going to text me yesterday, SB, but I never did see the text. So I figured you just got busy, but I was looking for it. Okay, on the ISBG, one of those myself. I always forgot which one it is. It's the one with gold and stocks, and I like the idea of them. I'm nervous about them because they're fully leveraged. They aren't hedged. I wouldn't want to put a whole lot of money in that thing because it's fully leveraged. If both assets in this doing goes down at the same time, and they should maybe over a long period of time, but maybe over the course of a month, they move together for a while before going back to the usual relationship. It could be enough to get you a margin call, or they make me nervous, but I'm very intrigued about it. So it's kind of a wait and see, and I just have a small, about 4% or something, a small position, but I got some of that in meme Y the other day. So anyway, yeah, Tap Alpha are good. I mean, there's just so many funds. I'd like to get Tap Alpha, but there's ones I want more. I mean, but I'd really like to get Cornerstone. I mean, there's tons of good funds that I would love to have, but I may never get just because there's ones that are ahead of them. Cornerstone, CAIE, Tap Alpha, the Tap Alpha funds. I mean, those are ones that I really would feel comfortable getting, but I haven't yet because I'm obsessed with blocks, and you know what I'm obsessed with because I like meme stocks, I guess. But anyway, but I could definitely see myself getting some of those in the future. I'll get CAIE whenever the market. I will get CAIE someday, but I wouldn't be surprised if some of the other ones I just admired from afar. Really, the way the Yield Max and the Round Hill and Rex, I just like those types of funds. Anyway, all right. You keep asking about ISSG to State Gold, but they aren't. Oh, really? Stocks, golds, but they aren't answering. I'm sorry. You're watching ISBG. See what it does. Yeah, I got you, Fish. I'm just interested in the first thing I want to see is the dividend. I don't believe they've paid one yet. I mean, they haven't. I didn't get a notice. Anyway, all right. I'd be interested to see what kind of dividend they can pay. Their option strategy is awesome, and I was playing with them. I love what they're doing. I'm just being honest. It makes me nervous having all those long deltas. You like the TMLP concept? Yes. Did you watch my video, SB? I made a video on it. Hey, Mayor, how you doing, bud? You've been adding the blocks in NV2 when it goes below your cost basis. Yeah. I mean, those are tough funds. Those are tough to beat. All right. So let me show you what I think. And for those, because I know exactly what SB's talking about, and maybe all of you guys do too, but in case you don't, let's just go try to model it. Should I do it in SPY or should I do it in, I just always start everything with a covered call. I don't know why, because I don't think they have zebras even in here, but I just built stuff from scratch. So for this trade, we don't need stock. So remove the stock. Okay. Should we do, I'm just going to do SPY just to show it, but it might work better in an individual stock. And I'm going to do my interpretation of it. So you said you did 2 zebras. All right. Maybe they have zebras in here. I guess actually a zebra is right here. Call ratio, back spread. Not really. All right. All right. So let's do the call zebra first. So 0 extrinsic. So I'm trying to think the trick to do this. You have to look at the option chain to do this. Yeah, give me the strikes. Just give me, yeah, I get the put zebra and the call zebra, but I can do it in Tasty Trade. I can't do it here because it doesn't have extrinsic. Basically, you need to, well, just give me the numbers and we'll go from there. I can't believe they don't have a zebra in here. Show spreads, future, cover call. All right, on long call add. All right, July 31st. All right, so July 31st. I got it. So give me the call strikes if you don't mind. We'll put them in here and check this bad boy out. Sell 709, buy 2 662s. Okay. All right, that makes it a lot easier. So maybe I can, well, I'll show you. Sell 709, sell 2 662s. Okay. 662s. And we're selling this 2 of those, and we're buying one of those. So we buy that one, and then we sell this one twice. Well, not 3 times. All right, so let's zoom out a little bit. All right, so that's your long position. That's your long. The reason I call this zero extrinsic, I'm trying to think here. So this 662, see, it actually goes for 62 bucks. All right, 62 plus 62 is 724. So this thing is like 30 points in the money. The ones you're buying you're paying 30 points in it. These are the ones that you own have 30 points of extrinsic premium in them. They're 30, okay, but you're selling that. You go out and you sell an option that has the same amount of extrinsic premium as the 2 you were buying. So it makes it where you're paying 0 extrinsic. Okay, so well, it just slipped. It just slipped. So okay, 709 662. Okay, now we'll put the puts on there. Now we're gonna add we'll add a buy put and a sell put. So the buy put is, yeah, and I'll put the trades in there. I'll put the fills in there in a second. Put sell the 706 and buy the 740. Sell the 706 twice, right? And then I have to make sure it's a put. So yeah, okay. Sell that one twice, and then buy the 662 put. So you're on 662 on both legs. Okay. Once on the, yeah, you're, gosh darn it. Sell the 709 once. All right. All right. 709 and 662s. You sell the 709. Oh gosh, dang it! All right, and you buy the 662s. Yeah, sell the 709 and buy the 662s for 270. That just that formation right there kind of looks like a lightning spread. But hey, Bond, what's up? We're trying to figure out this trade, and I've got it all messed up. Okay, so sell the 709, buy the 662. Those are calls. Gosh, dang it! What in the hell? Sell the 709 call and buy 662 calls. Okay. Sell the 709 and buy 662s. And on the puts, you sell the 706 and once, yeah, okay. Sell the 706. That's where I got messed up. Sell the 706 once, and then buy 662s. Okay, now I don't have the prices that you paid in there, so you may not have that big of a valley of death. I would have to go in and put in the prices that you paid, but I'm guessing your valley of death doesn't look like that. Oh, check your phone. Gosh dang it. My phone's dead. I got my iPad though. I got my iPad. Okay. Yeah. Okay. Sell the 709 by on put. You sell the 709. So let me go through this on put. Okay. All right. So there's selling a 709 put. Perfect. And then buy twos. Put sell the 709 and then buy 2 740s. Okay. Yeah, because you have to go up this way, of course. Yeah, okay. All right. So you sell one there, and then on the call, sell 709, buy 662. Okay, that looks closer. I know I don't have your exact prices. So SP's valley of death may not really be that big. And SP's not worried about the valley of death because if the market doesn't go anywhere, SP's going to be selling probably weekly strangles against this, or he's going to be selling options against it. Those strategies do better if the market goes nowhere. So if the market goes nowhere for a couple of months, you're just going to be banking on the ones that you're selling, and you'll fill in your valley of death. But the whole time this is happening, the thing I like about this, okay, you're filling in your valley of death, whatever, the whole time it's happening, if the market does hit a black swan, you're covered in either direction. Or let's say something really good happens for a change. Maybe, I don't know, it's something, just some gigantic news happens, some breakthrough in technology, and the market's up 5% 3 days in a row, or something like that. Well, you're in on that too. That would also be a black swan. It could also be painful. So so that's the long portion, right? And then I'm just thinking that then you're going to do a sell call, sell put, but you do this, you switch the expiration to the weekly expiration. We go out here to, Friday or whatever. It doesn't matter, it got here till Friday. Make sure I did that right. Yeah, 2926. Okay. Low open interest. Hang on. What do we have low open interest in a SPY? We got to Monday here. Sell it. So then you also have to add a sell call. And then on the sell call, it's the same date, the 10th. But you can't, this is your profit and loss just for the week. But then these expire, right? Yeah, like, okay, 35 delta. So SB's telling me what he's doing is he's going to go out here and he's going to go out and sell a call a little bit above the market, maybe sell the 705 and then sell a put a little bit under the market, maybe a 35 delta or something, right? Both directions, weekly short. Yeah, but basically, it's two different trades. You're long and short at the same time. You mentioned I probably shouldn't even try to show them all together. Let me. It just confuses it to show them all together. Here's what let me show you what here's the trade that I thought I discovered. So check this out. Okay, this is the best way to build it. Yeah, it is hard to overlay. SB is telling me it's hard to overlay because of the time factors. You can't really model it because of the time factor. The models where, okay, but so here's the trade that I discovered. Because so you have, let's say you have, who has earnings this week? Apple. I love this for earnings trades. Okay, so you have Apple. They have earnings this week. So, and we're going to build we start with the double diagonal. That's it. Okay. We have Apple. They have earnings this week. So what we're going to do in my strategy, sell a call and put that expired this week. It's the same thing as SB strategy. So sell something, but then have something long. So my sell something is this 257 call and put. My something, and that's in this week's expiration. My something long is in next week's expiration. And the way you make money on this trade is that the shorts, you hope the shorts that expire this week decay at a faster rate than the longs that expire next week. And typically they do. So that's the idea on this type of trade. And this is called a straddle strangle swap. You still want it to stay within a certain range. You still want to stay within a certain range. What I did that I thought I discovered was to double your long legs. And you can make a trade that has theoretically no chance of loss, which is always what I'm looking for. But it can lose. I mean, because after earnings come out, what happens is implied volatility gets crushed. And if it doesn't make a move, there's no such thing as free money. So of course it can lose, but you give yourself a good shot at a big move in either direction. I love these kinds of trades for earnings. Anyway, but that's the way I do a straddle strangle swap. That's a ratio straddle strangle swap. It's the same philosophy though. This call cost, or this call you sell for put you sell for $4, $4.60. Then you sell this call for $5.50. So you bring in $900 every week. Well, you bring in $900 on those, but then you spend a little bit more on the calls and puts, but the whole thing can be done. Look at this entire trade's a credit trade. That's the whole key of it. You do it for a credit and then just hope for a big move in either direction. Anyway, yeah, of course I sent it to you. It's called a ratio diagonal straddle strangle swap, ratio diagonal. Let's see. Do I have to save trade? Yes. Save trade. I'll just put it in the chat if that's all right. And maybe somebody else wants to get it and mess with it. But that's a decent way to play. I don't know. That's a decent one. That's the way I like to play earnings trades because you don't have to make a decision. You're in if it goes way up, you're good. If it goes way down, you're good. And if the volatility goes up for some reason, you're good. Now, if you do it as an earnings trade, the volatility is not going to go up. The volatility is going to go down. But if you do this not as an earnings trade, let's say you're worried about you can do this not as an earnings trade. And then if you get a risk off event and volatility doubles, it does turn into a trade that has no chance of loss. You can be a risk-free arbitrage, but you need vol to pop. And if for some reason vol is the opposite and gets cut in half instead of popping, then the valley of deaths appear. So no free money, but it's not a bad way to play it. Anyway, so hopefully you guys can get that out of the comments, right? Or I probably should have sent it to SB. Like, he probably meant text it to him. He probably meant text it to him. So let's do it like this. Sorry about that, SB. All right. All right, there we go. Boom. All right. So, okay, you got it. Okay, I'll just make sure. All right. Decent way to play earnings. There was a fund that came out and did something similar called TRES, TRES. And that's kind of when I figured out that I didn't invent the straddle strangle swap. Remember, TRES was a fund based on TLT that actually was a Defiance product. And they were doing the ratio diagonal thing. They were trying to think if they were doing. Well, they were doing a straddle strangle swap strategy. No one bought it. I don't think it ever got over $1 million in AUM, or if it did, not by much. And they closed it down. But yeah, Jay, that's when I first met Jay, and he was impressed because I knew exactly what it was. I said, that's a ratio. And he said, that's exactly right. You get it. So anyway. All right, guys. Well, I guess I'm going to get out of here, see what's going on. Remember, trying to think. I think if I have anything else to talk to you guys about. Oh, yeah. I wonder if we're going to have a daily factor tonight. I hadn't really thought about it. It's supposed to be Tesla Tuesday. I guess we'll have it because I'm trying to keep up with the channel better, but I really got a bunch of stuff to do tonight. Anyway, I better get out of here, but I'll be back about 8. We'll have Tesla Tuesday. Anything we didn't talk about now, we can talk about then, right? All right, guys. Well, thank you so much for watching, and thank you for listening to me and SB talk about options. My favorite thing to do. Talk about options. You notice I haven't been doing it much lately. I quit about 6 months ago and started trying to concentrate on the high yield, just as far as the influencing goes, because I get too scattered. If I want to do options, I need to make just an options channel, or if I want to do this is kind of a high yield channel. So, but I'm still, still in love with them. All right, guys. Well, thank you so much for being here, and I will talk to you later.